Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the ES, and you know what? I entitled this webcast that it's just a big old range trade, and that's exactly what it is. From the 82 to 85 level down to the 65 level. The bears have demonstrated no ability to get over 82.5 with any consistency, certainly not on a closing basis. By the same token, the bears are unable to take out 65 on a closing basis. So while we may dip, and it's a sloppy range, which makes it hard to trade at extremes, it makes you think when we head over, okay, we're done. We're headed up to the 1900s and beyond. And then you find yourself, down 20, 30 handles, less than a day later. On the downside, you see 65 crack like it did on Friday. You say, okay, well, we're done now. That's the range. They finally converted 65. We're going to go down, and test some of these lower areas. And what does it do? It bounces right off of the middle band here, the green line, and we head right back up into the range. And now Globex high is 81.5. So now we're trading back up at the upper half of the range. So you've got to be careful. Don't get greedy. Control your size. Control your risk. And don't be a believer in either. There's no room for a ton of conviction, certainly no room for ideology. You just have to trade the range as it comes. And part of trading the range is kind of accepting a couple of things. Accept that you're not going to catch the high and the low of the range every time through. And accept that when it does break out or break down, chances are you're probably not going to have as much on as you would have wanted to, because you'll have been taking profits all the way up. And you know what? That's a nice problem to have. The way to stay out of trouble is don't anticipatorily fade the range. And that'll mean that you don't usually end up with as much on as you would probably like when it comes back down. But it beats getting your face ripped off. Either by some, big old, up off the bottom V, or by some collapse up at the top. Because when the range does break and we move back into the middle of the range, it tends to get there pretty quickly. We've had some pretty violent moves up and down. So you got to watch yourself. What am I looking at? What am I looking for today? You could probably tell me what I'm looking for today. I want to see what happens if we get back to 82.5. If 81.5 is a Globex high, then that just confirms the range. The bulls remain in trouble, and we head back down towards middle band. If we break above and then confirm the top of the range as support, that is an area where you can get long for a leg up with, and still control your risk. You just can't blind assume that the range is going to break over today. You may be right, but if you're wrong, it's not going to be a happy Monday. So let's see what happens with 82 to 85. If we break back down inside, the range as we have been, then I want to see 79. You get the daily pivot down here, 70.75, which is a decent, 10, 11, 12 handles from the highs. That would be a natural point for a higher low versus the Friday lows, which were here and here. The Friday trade was a very difficult trade because you made a low, then you made a lower low, and this got a lot of people leaning, and that's why you've got 1, 2, 3, 4, 5, 6, 7 15-minute candles straight up, because you caught them all leaning here on a lower low. And that's what I mean. You have got to be careful that you're not assuming a breakdown. Control size, control risk. Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Come check out the website. Come check out the chat room. We would love to meet you. We can absolutely help you with your trading, and we look forward to doing that. So I will be back tomorrow morning with another webcast. Trade them well, everybody.